Okay. So let's lower it on. Yeah. Let's take that while we're on. All right, awesome. Okay, so we're gonna go over the price action. Just a little quick review. I want to go over you guys to see what you guys saw, explain to me, and then once that's finalized, we're gonna go on to how to identify a shift of structure on smaller time frames so you can actually catch it by minimizing your stop losses. Okay, so right now, Ryan, you want to go ahead and go first? Share your screen. I'm gonna start sharing mine.
So this is the first one, or the second one that I did. I went from this bearish, the bottom of this bearish right here. And I highlighted 61.8. And once you go to the 30-minute, right there, and you zoom in, it starts to get a little clustered at the top.
Mm-hmm.
You can see it start to engulf right here.
Awesome. And then there would have been an entry, so we can actually enter on sells. Due to the fact that we have Fibonacci, we have markets going down, and then we have price action. Okay, so those are the three things that we must have on every trade: structure, Fibonacci, price action. Okay, so you have all those three, so that's good right there.
Sweet.
Okay.
Stop sharing.
Yeah. So go ahead and share your screen.
Wow.
Let's keep switching like that. See what when I go for 4 hours. See different.
No, same chart.
It's the same chart, I think, but it's different areas.
Let me see, zoom out. Yeah, how many did you highlight?
Did you only highlight one, or did you highlight several?
I thought it was several, but they keep switching back and forth.
Should we go on your H4 time frame again?
Oh yeah, you have two of them.
Yeah, so the one that we're seeing right now is the one that you have at the very top.
Yeah.
Okay.
Yeah, it's going up. Bullish trend.
So remember, you want to be able to see everything. Right there, you can't really see your candles. So zoom in more. And then, wait, do you want to have them change their candles?
Yeah, let's have a
Yeah. So here, I'm gonna go ahead and share my screen.
Okay.
You guys go ahead and take a picture of the candles. So you guys can actually change the colors, same ones that we have over here. So you can actually identify and see a lot clearer the candles, okay? So to change the candles, all you gotta do is right click or double click on the candle, and then these are the colors right here. So go ahead and take a picture of it, and go ahead and put those colors. And then you got the background too, right?
Yeah.
And then once you get that one, I'm gonna go ahead and go on the background one, so you guys can do that one too, okay? So background's gonna be like that. So go ahead and take a picture of that one, and so you guys can set it as well.
So right click, settings.
So once your guys' settings are done, just type it on the chat ready, so that way I can see when who's done, or ready or done or okay. That way we can all go at the same time. Now with these colors, you'll be able to identify your candles a lot better. You'll be able to see and separate them instead of being all cluttered. Now on mine, I do have different colors, but they all look similar. Okay, but for now, we're going to be working with these colors. And then tomorrow, if you guys do want to change the colors to the ones I have, I'll show those ones as well. But those are really the only two settings I have: this one and the other one. Awesome. So we just have 3 more. That should be good.
What do you type in?
On chat. Okay. All right, so we're all ready? Nobody's missing, right? All right, perfect. So now we all have this. Go ahead and share your screen now, so that way we can go into it. Let me stop sharing my screen.
Four-hour time frame.
Okay.
Like here.
So now that you highlight your 61.8, you want to put a pink square right there, where you see all that consolidation, all that market just like stacked up right there.
That first one,
You can do any. They're both places where you could have done entries, and I'll show you why right now in a bit. So just go ahead and change the color. Yes.
I messed up.
Okay, here.
I tried to change the candles, but I put like squares all over.
Okay, let me have I'll have Nick help you out right now.
So then I go down to 30 minutes.
Okay.
Put my way.
Mm-hmm.
Super spot.
Now we're looking for price action. Like we want to see those variations. So here, let me go ahead and grab your. I'm gonna ask for your remote. Just put it accept. All right, perfect. So right here, what you guys can actually see, this right here is a bullish engulfing candle. Okay, we can actually see the market created over here, and right when we got that bullish engulfing candle, the market continued on going up. So this right here would have been my price action. But there's several price action in here that I can actually identify. We have price action over here as well. Okay, so we have price action right there. We have price action over here, and then we have this right here as well. Okay, so all that has been price action, and it's all been in the box that we had created. Okay, so price action, price action, price action. Okay, so now go. So that one's good. Okay, so who's next on this one? I'm gonna stop sharing my screen.
Oh, is that we're supposed to do this the 80?
No, any pair. So go ahead and stop sharing your screen and go So right now, where we're going over how to find price action. Once we find price action, then we're going to go into how to find structure on smaller time frames so you can actually enter off of those ones. Okay. So you'll be entering off of M30 and also off of M15, depending on where the price has actually been going towards.
Right back here. This here was a lower high.
Okay, so zoom in. There you go. So every time we're doing market, you always want to see like this right there, how it is. It's perfect. That's how you want to see it. Like you want to see it, all the candles. You want to see what's going on, so on. Okay. So
Lower high there.
Mhm.
This was
Okay.
continuation.
So just do a quick recap on why it is a continuation. That way everybody can see. So you guys see how he put it from the high to that low point, and it went to the 23.6. So it didn't go to 38.2. So due to the fact that it didn't go to 38.2 Fibonacci retracement, it's considered as a continuation. So what's going to happen? You're just going to continue on putting your Fibonacci onto the next retracement. So that's what he did. He moved it down to the next retracement all the way down. So go ahead and put it up.
So over here is where the final analysis work.
Exactly.
That's the support range there.
Mhm.
You get a balance of 38 and trace,
Mhm.
and here's where we got some consolidation.
Okay. So right when you saw consolidation, that's when you start seeing, and you put a box on that. So when you go into smaller time frames, you can actually start identifying price action there. In that area.
Also the 61.8.
Mm-hmm.
Look over here, support.
Exactly. So what is that called? We went over it like the first hour in the class. When a support is now a resistance.
No,
No.
it's a reversal.
No.
No. What was the question?
When a support is now resistance. We went over it when we were talking about consolidation. No. So where's the? It starts with pull.
Oh, pullback.
Okay, there you go.
Pullback, yeah,
It's a pullback. All right. So if you guys don't have that on your notes, write it down. Okay.
Pullback. They're in there somewhere.
So all of these questions are being in the test, all right? I want you all to be A's.
When it equals support or resistance, it's
Uh-huh.
called a pullback.
Yes. So when you're seeing the market going down on a downtrend market, and you see the market make structure, comes back, yeah, and it comes back and taps that same area, it's called a pullback.
Okay. And if it doesn't, it's just a retracement.
And it's just a retracement, not. So look, let me go ahead and grab your remote.
Yeah.
So just give access right there.
Where I click do that.
I think you gotta go out. It's probably behind all your other stuff.
Do that.
So you probably have to minimize it. It probably went to the back on your desktop.
Oh, yes.
Okay. So now go back to the there we go. All right. So what we're seeing the market that has created structure, right? The market's going down and it's going up. And let me actually change the color to this and make it a little lighter. Okay. Perfect. So the market's going down, up, down. So you see what it did right here? This right here would be an area of support that I had created first. And what it did, the market came back up to that area of support and reacted as a resistance, okay? So my pullback is now that area that was once a support is now acting as a resistance. Was once a support is now acting as a resistance, okay? So that right there is called a pullback, all right? So now go ahead and take the remote back and go on to the price action aspect. So you got the control now. Oh, you see on the pencil, very left side, there's a pencil, blue. Click on it, you have a lock on it. So you're probably gonna do one more drawing. Yeah. And now exit, and you should be good.
So yeah, that was the support. This is resistance, and I saw some consolidation there. I see the pink or the red.
Okay, you know.
So these are the three candles I got highlighted.
So take that the circle red. That's why it's kind of hard. Yeah, exit.
Yeah.
There you go.
So this is variation.
Yeah, bearish variation.
And that's got some wicks right here.
Mhm.
Shows some exhaustion. Doesn't it?
Yeah. So we're seeing exhaustion. We're seeing that it's in the 61.8 level. We saw that it was once a support, is now acting as a resistance, so that's a pullback. So we're having a lot of confirmation right here. And then also, I believe you had a trend line on that one, or was it on a different one? Did you have it done? Okay.
Yeah, but there is a trend line for this one. I don't have it drawn on right now.
All right, perfect. So that one's good. You have everything set up. Your Fibonacci, your price action, perfect. So now let's go to the next person, and then once we're done with everybody, we're gonna go to small time frames so we can identify a change of structure on small time frames. Okay.
And then also, so you guys know, the exact way that you're doing this is how the homework's done. Exactly like this, colors and everything. Okay.
So over here. So we're gonna be going like that.
No, I just
Okay.
have a question.
Oh, okay. Go ahead.
What's the smallest time you would go to with your confirmation?
So we're gonna be using all the time frames right now. We're gonna be using every single time frame just to see like break of structure, continuation of structure. So we might even go to 15, and it's very rare, but you might also go to the 5. But we want to focus on 15 minimum, and the ideal scene for price action would be M30. Okay. So go ahead and share your screen.
How do I share?
Should be in there.
Bottom.
All right. Oh, actually, with this. With this downtrend, I got at the bottom of this bearish candle.
So why did you get it off that one and not the one on top? Oh,
Yeah,
Because
Yeah.
guess I got confused because of the little market break. I guess.
okay. So let me go over it real quick. I'm gonna do a little quick recap. So I'm gonna ask for your control. So just put accept. Okay, awesome. Okay, so when I'm seeing, did you see why Oliver didn't get it off of one retracement? He continued going lower. He did that because it didn't hit a retracement, which was 38.2. So when it doesn't hit a retracement like a 38.2 minimum, you're not going to count it as a new structure area. You're going to count it as a retracement. So what's going to continue on happening? You're just going to continue moving your Fibonacci more. Okay, so for this example right here, what you had right here, watch. It would have started off from over here, from where it actually started. This bearish move started from over here, started going down, and we can see a little setup right here, but it didn't go up to any retracement, no Fibonacci. And we actually have this one here. There you go. So there you go. And the market, now it came all the way down, and this is our last bearish candle. Okay, so since it's our last bearish candle, we're gonna put our Fibonacci on that bearish candle, and it came up to a 26.6. Okay, so this is not considered as a retracement. So I'm gonna go ahead and take this one off, and I'm gonna wait for the next retracement. I'm gonna wait for the next retracement, which I'm gonna take it down to all the way down over here. Okay. Now we're seeing the market continue going down, and it came up to 38.2. We see this area right here, but we can see it continue on going up higher, okay? And then it could continue on breaking my 61.8. So now we're doing a shift of momentum, okay? So now we're changing to an uptrend structure. So now we're gonna delete this Fibonacci right here, okay? Let's see what's gonna let me. We're We're going to delete that Fibonacci and start our uptrend from the very bottom one over here. Okay. Now we started from the very bottom one over here. Our first impulse was to this area. Okay, it goes to this area. Now, did it go to the 38.2 Fibonacci retracement? It didn't reach it, right? So we're not considering that as a new structure. So what's going to happen, I'm going to move this one to my next impulse, which would be right here. Did it?
That's tougher.
Oh, okay. Did
Your
it?
computer die?
Yeah.
Okay.
Okay, go ahead and put it on a charger. And meanwhile, let's have some, what was his name again? Daniel?
Seriously. You guys ever studied start school?
You're
like, hell no,
He's like, let's go ahead and next person to, oh, yeah, your computer said as well, right? Are you charging it right? Oh, okay. Daniel.
Alright. I couldn't take it.
Okay. So, let's see. So, like this one.
Go ahead and exit that little pop-up that came up
What?
on the left. Yeah,
Change the.
and then
oh,
we're gonna
they
come
can
up.
take green. Change the background.
Alright. So, right
Oh,
here.
and go ahead and change your colors real quick, just so that we can actually see like the whole movement of the candlesticks.
It doesn't do what's not good.
Do it.
Double click.
Yeah, right there.
Yeah.
And then
Candles. Go back.
on style. Does somebody have a picture of it that I can hand it to him?
I took a picture of it, but
Okay.
saw this on there. I'm not sure. I think that's where I was.
Ryan, you skate a lot?
I actually ride BMX.
Okay.
Yeah, I only brought my skates
Yeah,
because I couldn't bring my bike.
Yeah.
Yeah. That's why I'm trying to learn how to do this so I can ride my bike more.
You'll ride your bike.
Yeah.
Ride it all day.
Yeah.
You're ready.
Like you said, 45.
Really good smile.
Okay.
Like to?
We also.
You got any videos?
Yeah. Oh, yeah.
I got some seconds.
All right,
Check
awesome.
them out later.
Alright. So I found this one. I started to fit right here.
Mm-hmm.
My ended is right here.
Okay.
Saw that it touched.
Now that you went there, check. Did you have a previous retracement valid or no?
An invalid one? Probably.
The one on top. So you see there's that one. So we see it did go to 38.2 Fibonacci retracement. So now our next impulse is going to be from there, from that 38.2 Fibonacci retracement. So what I do right here, let me go ahead and grab your remote so I can explain. So just go ahead and put OK. Can you find it where it says, so you can give me access? It's probably on your desktop where it says give access. So go over to, yeah. Let me request it again. Go to your desktop, the very beginning, Like when you open your computer, it's gonna be on the back.
Oh, okay. Like, alright.
Yeah, it's like minimize all that, and it should be in the back. Okay, there you go. So now, all right. Now, look what I did right here. So I'm seeing that the market actually came up, okay, started from over here, and then actually we had a small retracement right here. Okay, so we had a small retracement. We're seeing that the market started going down from this area right here, came all the way down to this area, came back up, and did it hit a 38.2 Fibonacci retracement? It did, right? So what I'm going to do next, this one is now a valid retracement. So I'm going to bring this one down and bring this one over to my next impulse. Okay, so to my next point B. My next point B is this one. Okay, so you can see it continue on going down. So what am I going to do next? Move it to the one down over here. Okay, so I moved it to the one down over here. Now, did I have a valid retracement? Yes, right? 61.8. So since I have a new valid retracement, I'm moving this Fibonacci down to the one that I had a valid retracement, which is right over here. Okay, you see, right over here. Now, the market continued on going down, which is doing his impulse, and the impulse finalized on this candle right here. Okay, this is my point B. I'll go ahead and spread it out. Now, did I have a valid retracement? Yeah, right. It came over the 38.2. Right here, we can actually see it came to this 50-point Fibonacci level. Now, you can take in consideration, the ones that we take mostly in consideration is 38.2 and 61.8, okay? But it is valid, okay? You want it to be, it's valid as long as it goes over 38.2 or it reaches 38.2, okay? So we are on a valid one. Now that we found this valid one, now you want to go look into price action, okay? So go ahead and take over your control, and that's where you would have put your Fibonacci from. So it didn't go to 38.2, it went up to a 50-point Fibonacci retracement. Yeah. So you guys see how I'm moving my Fibonacci's? As long as like, if it's confirmed as a new Fibonacci retracement, you move it down, you move it down, you move it down.
Just keep confirming.
Yeah.
That's what you do in example, you start trading at the very beginning.
And once it breaks the Fibonacci, you change the Fibonacci level. Yeah.
Was it this one? Yeah. So right here we're seeing some there's
Yeah, so now we have price action. Okay, we have a bearish variation. Okay, perfect. So now everybody went through them, right? Now I'm gonna go over how to, you guys know how to identify price action now, okay? Perfect. Now how to identify price action with a switch of structure with lower time frames, okay? So this right here, you can put entries based off of this price action, which is it goes to your Fibonacci level, you have a retracement, you have structure, and then you go off of your price action, okay? Which right here, you could have an entrance, and your stop loss would be above structure, okay? So by above structure, I mean 15 to 20 pips above structure max, okay? So right there, minimize it and let me know like where would your stop loss be? Because that's your new structure right there, okay? That's the new structure created. Where would your stop loss be? So yeah, go ahead on. Go on your 1 hour or 4 hour.
So how many pips?
It's 15 to 20 pips max. And then you'll start scaling down to 10 to 15 pips and so on. Okay. So like 15 is okay, it's an ideal. See, once you have your proper risk management, you have your structure and your price action, then you can go based off of that. So that right there would have been around your stop loss, okay? That's for like short and stop losses. So now let me go ahead and share my screen. Now I'm gonna go over an analysis how it is that would have been done, and then you guys do it as well after. So does everybody have an understanding right now how to find price action? Yeah, good, good. All right, so do you guys have any questions? Or you need me to stop or slow down?
So
Let me know because I get excited. I love doing this, all right? So I get excited, I start talking and I'm like, so.
okay, so the bid on the 4 hour,
Mhm.
you can go like as small as like just one candle, one really long
One
candle.
impulse. As long as it's an impulse, and then you see the retracement, which is the next bullish candle, that's where your impulse ended. Okay. So right now what I'm gonna do, I'm gonna go ahead and do a chart up on, what pair should I do on? Let's see. I even smile when I'm doing this. I love doing this. All right, so let's go. Let's go ahead and do a chart up on USD JPY. Okay. So what I'm looking for, I'm gonna start from over here so you guys can actually see how I'm transitioning from a downtrend to an uptrend and what is that I'm exactly looking for. So I can see that market started over here, the downtrend, right? So I'm gonna go ahead and do a Fibonacci from this level to bottom impulse, which is right here, okay? And just stretch it out. So now I'm looking for areas of resistance, okay? Either my 38.2 Fibonacci retracement, which is right here. So I'm gonna go ahead and put this as red. And this is what's gonna help you confirm if you're actually gonna be entering on a sell or not, okay? You guys can actually see the market continuing on going up, right? So how would I have been able to not take in a sell right here? By going to lower time frames. Now, your overall structure right here it's downtrend, right? It's downtrend. So what I did, now I'm gonna go to lower time frames like M30 and try to identify if I have any break of structure, okay? So we are on a downtrend. We want to see what downtrend structure on smaller time frames. Now, do I see downtrend structure in smaller time frames here? So right here we are on an uptrend, okay? On smaller time frames like M30, you can still see this uptrend. Okay, so the market's still going up, going up, going up. So there's no reason for me to put a sell into it because on smaller time frames, I'm still seeing uptrend structure. Okay, when I see a shift of structure, that's when I'm starting to identify my new bias, which is going to be selling opportunities. So for now, there's no reason why to enter on a sell here, no reason why to enter on a sell here, nor here. Why? Look at this. We're seeing that the market came down, and we're actually seeing uptrend structure, right? Uptrend structure. So now right here, what are we starting to see?
Pullback.
Okay, we see that, and then right here, we see the market actually broken. Okay, so when I zoom in, I'm seeing the market's going up, and then right here, what's this right here? It's like looks like a bearish variation, right? But overall, look at this one right here. Okay, so right here we are now looking at that bearish variation. Let me go ahead and change the color on you guys. Exactly. So we have a bearish engulfing pattern. So now we found that this line that I put right here, why did I put it right here? Because we can actually see that previously it was tested as resistance, resistance, support, support. Then right here we have this bearish engulfing. Are we going to enter off of that bearish engulfing? No. Why? Because we still are on an uptrend structure. Until I see this area being broken, then we enter off of it. Now look what happened right here. The market broke that area that was once a resistance, then a support, and it did what? It did a pullback. Okay. And then after that pullback, what am I seeing right here?
Oh, bearish engulfing.
Bearish engulfing. Now there would have been my entry to enter. Okay. Now, what else can I put onto this? Fibonacci's. Okay. This is where that that number you told me about, the 20, I think it was negative 27 for Fibonacci retracement. Okay. So I put my Fibonacci from the start of this one to the end of this one. Okay. And what, look, to the end, came up to 38.2 Fibonacci retracement. And then my first take profit that could be on lower time frames like M30 would have been right here. Okay. That would have been my first take profit on lower time frames. Now, you're going to be adapting to the price. You're going to be adapting to this right here. It starts as a scalp. Okay. So it starts as a scalp. Every single trade starts off as a scalp. And then you're going to be going to bigger time frame and see if it broke structure. Perfect. It goes to an intraday trade, break structure, and swing trade, and so on. So you're adapting to the markets so you can actually catch the minority pips. Okay. But overall, the trend is bearish. Okay. So since it's bearish, we know that's going to be a good entry for us so we can actually get a good amount of pips. Okay. Now, if it was bullish, then yeah, I would have just been at a scalp because that'd be risky because I'm going to counter trend trading and you don't want to do that. Does anybody know what counter trend trading is? It's when you're trading against the trend. Okay.
So when it's going down, trend, so you're catching that pullback.
Exactly. So go ahead and write the definition. Go ahead and write the definition. Counter trend trading.
It's trying to like catch these cells right here. Like even though they're all trend, market structure is up on a 4 hour. Just trying to catch these.
So for example, if you are on a bullish structure, it is considered counter trend trading when you are selling into that bullish structure, and vice versa. Swing trade is when you're keeping positions for a longer time. Okay, and then I'll go over that right now, right when everybody's done with the definitions. Okay, but thank you. So everybody got counter trend trading? Perfect. So now, you want to put up there the scalp swing trades?
We're good right now. Let's finish this up and then actually take like a 5 or 10 minute break and then jump back in because they have to do one more quiz and then do homework.
Okay. Okay, so we'll go over the types of trading right after this explanation. Okay. So right here, what I'm seeing, I would have entered off of this confirmation due to the fact that I saw a break of structure on smaller time frames, in this case M30. On bigger time frames, we know we are in a bearish structure, so therefore we know we will be in profits almost immediately, backed up by price action. Okay. Now our first take profit would be that negative 27. Okay, that'd be a conservative take profit, which we can take in consideration. Now our second one would be that minus 61, and then we can also go off of previous structure. So previous structure right here would have been in this area right here. Why? Because this area was our previous higher low. Okay, so we can put a line right here, and this right here could have been our take profit. Okay, so now that I have that done, how would I have been able to take the next trade? Okay, in order for me to be able to take the next trade off of this, I know this was a good setup, so this is a valid Fibonacci level, right? Valid Fibonacci level. So what I'm doing next, now I'm going all the way down to my next impulse, which was right here, and this one was the start of the new valid Fibonacci. So I moved it over, and now it came up all the way to my 38.2 Fibonacci retracement. Okay, so now that I came up to 38.2 Fibonacci retracement, I'm still seeing a bearish structure, okay, and this right here could be considered as a bearish move as well. We're seeing this right here, which is a bearish variation, and we could take that in consideration to actually sell into. Okay, now it would have gone negatives throughout the time. Let's see how much it would have gone negative. Okay, now with this, you're going negative. Your stop loss are going to be a lot closer. Therefore, you're not going to be risking a lot of amount. You're not going to be risking a lot in your account. Okay, so our bears would have been right here. How much would have gone negative? It would have probably taken out right on 20 pips. But our structure, remember, is right here. Our structure isn't where we started. It's right above structure. So our structure would have been in this area right here. We got about 15, 20 pips above. So it didn't even hit the 15 pips. 15 pips would have been over here. So you would have still been inside the trade. And then due to the fact that you would have been inside the trade, you would have got a drop of about a possible 64 pips. Okay, just for waiting out that trend right there. So you can see it actually came up. It even tested the 50-point Fibonacci retracement, and it tested one time again, the 61.8. Now you could have entered off of this one right here, and then you could have entered off of this over here. Okay. Now, how would have you been able to enter off of this right here if we don't see no price action, nothing indicating us that's going to go down? We do see a lot of exhaustion. So when you see a lot of exhaustion, what do? We highlight it, and we go to smaller time frames to see if we see a change of trend. Okay. So what am I going to do? I'm going to go to smaller time frames like M15 and see if I can identify a change of trend. Now right here, what do I see? The market's still on a bullish structure, right? But also I see right here a piece of support, okay, and then resistance over here. So I'm going to go ahead and label my support, okay? Now I want the market to actually break underneath that support, which it finally broke underneath that support and came down over here, okay? But right here, I would not enter on a sell. Where would I enter on a sell? On the retracement, okay? So I would put my Fibonacci from this part right here to this right here, extended to the right. And now where did it go up to? 38.2. And I would have entered off of price action right there. And you see it right when it closed, I would have been right in profits. Okay. So this right here is called patience. I was being patient. Okay. So you gotta be patient. You gotta wait for it. It might look really good, but if you're patient enough to actually see that change of structure on lower time frames, and then look for price action as well, you'll be able to catch these things with minimum drawdown. So you see, like on the last one, I got about drawdown about 10 pips to 11 pips. On this one, you would have got no drawdown. Okay, no drawdown, and it actually dropped all the way about possible 60 pips. Okay. And there you can continue on doing that so far, because if you want to catch another move, what would you have done? Move this one to the next valid Fibonacci, which would have been right here. And then this one to the next retracement. So no retracement, no retracement, no retracement. You would have pulled it all the way down over here to this retracement. And you would wait for that 38.2 or 61.8 and so on. Okay, everybody understand this part so far? On why you go to smaller time frames to identify that change of structure? Okay, perfect. So Alan, go ahead and do that. Yeah.
Let's go ahead and take like 5 minutes, 10 minutes, get some fresh air. Then we're gonna jump back in, and then basically, just get a little breather, get some fresh air.
And then we'll be having a checklist, like we had mentioned, over all of this, so you guys can actually have it and be like, okay, check, check, I have this, check. All right. So let's take a quick breather, and then we'll be back in about 5, 10, 15 minutes.
I know.
What you say? I love you.
I feel like that's one of the harder to see that. No, not price action. On the trade.
Yeah, she's like this thing.
Well, yeah, well, that's why you gotta, but like what I mean is like, just show. When he said,
How's it going? Need your laptop.
Yeah, I'm bringing the work much more.
I when it hits like the 50, 60.
It's class here.
Once it reverses.
It's more. It's more.
Oh, yeah, there's something.
Yeah.
Okay.
Okay, I was like,
Yeah, you should.
I've been complicating this entire process so much more than
Once you try, I'm gonna go home.
Yeah.
I only want to stay all night just watching the graph. Just go to
I don't know. I don't know if y'all did like yeah, and like flags and like triangles and something. There's too many different content. And you know what? You can't rely on like And I was like, okay, bam, it's on top. It's gonna go down. Shoot, like way up. And I'm like, yeah, you know what? It's because of so like if it doesn't it's just gonna be anyways. Like if it doesn't integrate they don't like the information to enter. We'll do it. Just wait for it. Or 61. So let's say it's going down, right? It goes up and you use it, right? And then it just goes down. Just keeps going down. Just wait on it. Wait on it. And once it's together, we might start. So I don't know where. Let's say, okay, let me get it right. So, you're gonna wait for it to start.
You should be able to do another instant one, or we'll have some time. You can hang out here until you figure it out. But, yeah.
But,
Yeah.
and like you said, for the business, to see structure, that one.
I'm gonna go and deep with which is do the breaking accumulation.
I think we do that. I think we do the quiz. We get these guys like on these definitions real quick. Do the quiz. Rate it. Go over the long ones, and then basically have them do a homework, and then it'll be about 6:30. So I'm just making sure that we did all these. We did this. What platform we didn't do this? Name 3 tools that we utilize. We did that. Did that. We did that. Did that. What time was it? Okay, 2 levels on. We did some of that, not the 4-hour one. What is consolidation, resistance, and the market comes to open? Did that. Probably higher entry point. What time are you looking? Yeah. Yeah, we're good on this. Yeah, if you want to actually get those ready. Yeah. Yeah.
Swing, right? Yes. 8 weeks of years. 8 weeks months. Yeah.
I've been demo.
Oh, yeah. Really get it right now.
You know why? Because why am I gonna do what they wait? You know, they'll be like, why am I gonna do it? What did that one keep my bank?
What's up, man? Yeah.
If you turn to wide drop from the broker to your bank account,
Yeah.
does that work on weekends or not?
Depends on your bank. Most banks, you have to wait till business days.
Basically,
Yeah.
So
Yeah.
something like TD Bank is 24/7.
What bank do you have?
I got Chase. Chase is not.
Yeah, Chase is not. Yeah. Some banks do. I mean, you might just have to wait a couple days. Usually it's business days, like a couple business days. Yeah.
Basically, like the trade from previous week, if you want to like take it
Yeah.
out this week.
Yeah, exactly. That's another thing. If you do it in crypto, not all places let you do crypto, but crypto you get it the same day. Cryptocurrency, yeah. If you,
Oh yeah.
yeah, you get the same day with crypto, so that's pretty cool.
So how you put the currency to your account?
So you get an account on Coinbase. You get an account on Coinbase, and then basically you buy it with either a debit card or a credit card, or you wire transfer it to Coinbase. And basically on Coinbase they verify you, and you have like different verification levels. So for me, I can buy like 50,000 Bitcoin at a time. Like when you start off though, you can only buy like 500 or 1,000. Yeah.
Oh, I got you.
Yeah. So you have to like kind of
Like,
earn that.
like I got this account on Coinbase.
Yeah, you gotta like earn your verification. It's like times and stuff like that. But yeah,
Like I got this Coinbase thing. Like,
yeah, you could buy it online, and then you could deposit that into a lot of different brokers. All right, guys. So we got these definitions real quick, just because you guys asked, and then basically we're gonna go ahead and jump in.